Welcome back to Power Lunch. Speaking about lunch, let's talk about food. We've spoken about finance. Let's go immediately to food and talk about Clover's results. These are the results to the end of June of this year. And here are the highlights. Revenue increased almost 11%, 10.7% to 8 billion rand. Operating profit increased 5.4%. Headline earnings per share increased by 3.4%. And a dividend increase was given to us of 12.7%. In the Power Lunch Johannesburg studio is Johan Forster, the CEO of Clover. Just look at the results, Johan, and they're respectable and they're good and solid, but I get the feeling you've had a fairly tough time, maybe even tougher in the first 6 months than the second.
Lindsay, we're very proud of the results actually, because the first 6 months we did a lot of investments in new platforms and new products, and it came back very nicely for us in the second half. So we were 34% down the first 6 months and 3.4% up in the second 6 months, or for the full year. Over and above that, the project Yellow Blue is reaching its finalisation, which was a great success. That was the story that we went to the markets for. So overall, we're very proud of the results that we've posted so far this year.
Tell us a bit more about Yellow Blue, which is coming to its conclusion. Why has that been so significant for you?
Project Yellow Blue was aimed at repositioning all of our factories that weren't in the right position. That was the reason for the listing and raising the funds. So we always realized that the markets would judge us by our ability to implement Project Yellow Blue. That has now been done. It was a 3-year project, engineering feat, in fact. Most of the work has been done. It's only the move from Mayfair to Clayville that will be done in 2 weeks' time. And that's all been done within the time frame, as well as within the capital spent that we've envisaged. So we're very proud of that achievement for us.
And it's turning things around. That's behind the scenes. What about on the shelves? Because you've gone from bulk to branded products. And is that something to do with the fact that the first 6 months were different to the second 6 months? And the other question is, after you've answered that, is did you anticipate problems a year or so ago, and that's why you have decided to change your strategic focus?
In fact, Lindsay, we've changed our focus since 2006, when we called all the producers or our shareholders, farmer shareholders, together at the time and told them that we were going to exit the bulk products, which we've done for that 4 years before the listing, but we still had some bulk cheeses and some powders left. Over the 3 years that we've been listed, we've now got rid of that fully. The last product range that we exited was mozzarella cheese, where there's no brand value in it. So it was always been part of our promise to the shareholders that we would do that. The first 6 months must be seen in perspective. That was a launch of 4 new products and platforms. And when you do that, you have to promote the products, and you can't get your price increases through. The second 6 months was easier because we only had 2 launches of new products, and we got our price increases through. So it's been a year of ups and downs, but it was for the right reasons, for the investments that we made for the future.
So you have been able to pass on certain price increases, but there must be resistance because of the competition and because of the nature of the South African economy. How much have you been able to pass on? Let's say that your input costs go up by 5%. How much can you pass on?
With our brands, we've been able to pass on all the price increases, except for in 2 categories where we didn't want to increase the prices because of strategic reasons. But we've been able to increase our prices because of the value proposition that we've been able to communicate to our consumers. For example, our milk now lasts 18 days instead of 12 days. And that was a value proposition that we could go to the market with. So the consumer, as long as you give them something, you'll be able to get that increases. And we're very fortunate that we've been able to get our price increases fully this year.
So people are actually understanding Clover as a brand now, and you're sort of building some kind of brand loyalty, it sounds.
Yes, we've increased our market shares in almost all of the categories that we've operated in, and we've increased our volumes quite substantially, over 6% year on year on a like-for-like basis. So we think that we're heading in the right direction, and the consumer is obviously appreciating the fact that we're continuously adding value to the product and that they're prepared to pay the extra money for that.
This is what you say in your post-results commentary, Johan. You say it is clear that inflationary pressures, high input costs and a weak economic environment will continue to prevail in the year ahead. But you go on to say we are confident that the investments made in products, as well as the efficiencies which are starting to be derived from what you've talked about, Yellow Blue, give us a strong footing to retain our leading market positions. So it's more or less the same for the next year. But tell me more about the state of the South African consumer. Are you seeing anything that gives you an idea that we might be getting out of the woods, if you like?
If you look at the retailers, where they have a huge amount of pressure in terms of costs and the down trading of the consumer, it's very difficult for them to negate these inflationary pressures, and all they want is lower prices. From a manufacturer's point of view, you have to continuously add value to your products. Otherwise, the consumer will trade down and they will go to the competition. In our particular case, that's what we're working very hard on, is to distinguish ourselves as a brand leader and to make sure that we offer that. But there's no doubt that the consumer is under pressure. They down trade, and they know that they're down trading, and they would love to trade up again, but we haven't seen any of that positive coming through yet.
You see a company like Woolworths, a retailer like Woolworths, for example, being almost a defensive stock. People that shop at Woolworths, for example, don't need to trade down. Are you seeing that with Clover? You mentioned people want to trade down and then want to trade up again. Do you find that people are not snobbish, but are defensive of your brand and loyal to it, and therefore keep on buying it, if you see what I mean? In other words, the people that buy Clover now don't need to trade down.
Well, I would say our market is half higher LSMs and half lower LSMs. The higher LSMs can still afford it, and there we see some great brand loyalty, which we're very fortunate, very much in the Woolworths type of environment. In the lower LSMs, however, that is where trust comes in again. For example, when you're on a taxi for 3-4 hours, you need to know that your product lasts when you get to your end destination. So there's a great loyalty there from a trust point of view. So it's both image and trust that we've been able to capture as a Clover brand.
Okay, all you've talked about now is more or less bedded down, but what about the future? The fifth point when you talk about the future is to enter new geographies. How committed are you to that?
Well, Cielo Blue was our first priority. We knew, as I said, the markets will judge us by the success of that or not. Whilst that was busy, we used all of those resources for Cielo Blue, engineers and our technical people. It's only the last 6 to 9 months that we've been very serious about looking at other geographies. We've entered Namibia quite successfully. We're already in Botswana. The 3 countries that we're looking at very seriously now is Mozambique, Angola, and where we're already manufacturing is in Nigeria, but we want to step change that into a new direction. So we're very committed to export the skills and our products into the rest of Africa.
Johan, thanks very much for your time this lunchtime. That's Johan Forster, who's the CEO of Clover, whose year-end numbers were released just a couple of hours ago. Alex